We all know that if Uber and Lyft continue to hemorrhage money the way they are without actually turning a profit, their time on this earth is limited. It might not even be very long. The question is, how long do they have before they run out of cash? Hey everyone, this is Kevin the Apptrepreneur. Welcome to my channel. If this is your first time here and happen to really like this channel, please do me a favor. Hit that subscribe button, ring that bell notification. We upload videos on a near daily basis and you will want to be notified when those videos go up. So anyway, I've actually talked a little bit about this last week. They actually project, when it comes to Uber, how long they have to basically burn cash. And Uberman Tampa sent me that article, by the way. I forgot to thank him for that, but thank you for pointing that in my direction. And in that situation, the people suspected that Uber had about 3 years left before they ran out of cash. Now, granted, some people might say, well, what if I bring in more money and this and that? Look, there's always variables, because basically that article was written like, if they lose money at this rate and their funds don't grow at all, then this is how much time they have left. Obviously, if they bring in more money and their losses shrink, they can stick around a little bit longer. However, eventually they will need to turn a profit, or else they're only delaying the inevitable. Now, this article from Investors Business Daily has actually looked at both companies. We're going to look at it, and they actually give us a glimpse of how long Lyft has to burn money before they run out of business. So anyway, quarterly earnings season isn't just about measuring profit. It's also a periodic glimpse into the financial strength of companies investors hope might join the S&P 500 one day. Hopes are high for ride-hailing companies Uber Technologies and Lyft. Just this year, shares of Uber and Lyft are up 35% and 9.3% respectively, which is interesting when you really stop and think about it, that Uber would jump that much while Lyft would jump just a little bit. But it should be noted, in both cases, they are still below, in Lyft's case, well below their initial public offering price. That's impressive if you consider the S&P 500 itself, off to a strong start, is up just 4.4%, and it contains neither of these stocks. There are also large holdings by millennials. Yeah, you know what was also a stock that was held by a lot of millennials? Helios and Matheson, aka the company that owned this thing. And we all know how that worked out. But stock price moves are just part of what winning long-term stock needs. Both Uber and Lyft are missing something important to both successful growth stock investing and S&P 500 inclusion: profit. They do not have enough of this. By the way, you like this little bank? I got it from Daiso for like $1. A look at Lyft's free cash flow. Lyft is in a much stronger financial condition than Uber. Now, take that comment with a grain of salt, because you actually see that flipping quite a bit. Some articles say Uber is in a better place financially, and some places say Lyft is in a better place financially. Really, I think they're both in pretty crummy places. They're both bleeding money. That's not where anyone wants to be. But according to this article, it has substantially longer time to find how it will turn its popular service into profit. Lyft's $2.9 billion in cash would last roughly 7 years based on its operating cash burn in the just reported quarter. The company, which reported its profit this week, posted a whopper of a quarterly loss, $356 million. A closer look, though, shows it burned $96 million in free cash flow during the quarter. Assuming the company can hold cash flow steady, and again, that's a big if, it has run away to figure out its business model. Granted, this company has been around for a few years at this point, so has Uber. And you think at this point, both of them would have figured out exactly how they're going to make money, but apparently not. Analysts think Lyft will lose $509.7 million excluding charges this year based on data from S&P Global Market Intelligence. That's a slight improvement from the $652 million it lost in 2019. And yet, Lyft isn't expected to post a profit until 2022. By the way, Uber's CEO Dara Khosrowshahi has said they will be profitable by the end of this year, for whatever that's worth. So while Lyft can keep driving, it is not a compelling stock. Given the stock's murky current and annual earnings, it sports an IBD composite rating of just 65. Now for Uber, even less runaway. Uber is larger than Lyft, but so are its losses. And that means the company had better figure out its profit plans in a hurry. It's true Uber ended 2019 with a pile of $11.3 billion in cash and short-term investments, which is more than what Lyft has. But that's not going to last long at the pace of cash burn in the fourth quarter. In fact, the $11.3 billion would run dry in just 6 quarters. That's just a year and a half from now. So, according to this article, not the one that Uberman Tampa sent me, these guys think that Uber has a year and a half to figure out how to make money. Well, can you understand why we're talking about companies other than Uber on this channel? Just yet, that's not very encouraging. And what am I going to talk about Lyft this whole time? I mean, look, Lyft might suck, but they're not nearly as headline worthy. Uber posted a $1.1 billion net loss in the fourth quarter, but it actually burned cash at a much quicker rate of $2 billion during the period. You can't do that for long. So, yeah, you can't. And by the way, sorry for the stutter, as always. And analysts see Uber losing money until 2022. But again, Uber CEO Dara Khosrowshahi has said they will be profitable by this year. We'll see if that actually happens because their losses have not decreased. I mean, I think Khosrowshahi is like trying to convince the investors like, hey, you see, we lost $5.3 billion this quarter. In this quarter, we lost $1.4 billion. So clearly, we're doing better. I think the investors are falling for it. But again, at that time when he's trying to, how should I put this? Trying to calm the investors down, trying to assure them that this was still a good stock to buy. He said, hey, this was based on a bunch of expenses that were one time. If you look at the losses before that 5.3 and the losses afterwards, they're very consistently a little bit more than $1 billion each time. They can't do that forever. Uber is expected to lose another $2.1 billion in 2020 and nearly $600 million in 2021. Only then do analysts see Uber making $1 billion in 2022. Now you understand Uber's low 68 composite ratio. So here's a nice little chart for us to look at. Uber and Lyft, how long cash will last. So here's the thing. Here's the cash and ST investments that they have in millions right now. Here's the cash burn in the fourth quarter of 2019. Lyft is burning a little bit less, and Uber is burning a lot more. Quarters of cash left at quarter 4 2019, and Uber has 5.7 months, and Lyft has 29.7 years. So, 17 months, 89 months. And year-to-date stock increase, Uber lifts a lot more. This, by the way, might help Uber stick around a little bit. The stock is unusual, going up pretty high. In fact, I felt a little bad because I was talking to a friend, privately, of course. This was not public. And after Rachel Holt left Uber, and it was like the week before the earnings report, he asked if he should sell the stock, and I said I can't think of a compelling reason to keep it. But the stock did go up, so I felt bad about that. But I'm not a financial expert, even though I talk about finances. I just do this kind of for fun. And the stock is going up. I don't know why exactly. And if it keeps going up, then yeah, you could probably extend this number quite a bit. Here's a problem, though, as investors.com points out. Cash-burning S&P 500 companies are rare. Companies must be profitable for at least 4 quarters to join the S&P 500. That's why cash-burning companies are so rare in the index. It's also why money-losing Tesla, whose stock is well over $900 a share, I want to add, isn't part of the S&P 500 yet. During the first quarter, only 31 S&P 500 companies posted negative free cash flow, says an Investor's Business Daily analyst of data from S&P Global. The biggest cash burners don't surprise. You have General Motors that burns $3.2 billion, and you have Boeing, because they have the problems with the 737 MAX model. They burn $4.3 million in cash. If you really want to own Uber and Lyft, diversify your bet. Both are industrials company. The Renaissance IPO ETF has a larger weight of its portfolio in Uber than any other ETF, 12.3%, and Lyft, it's a 3.9% holding in the Renaissance IPO ETF. And certainly, both Uber and Lyft could raise more cash by borrowing or selling more shares. After all, Tesla plans to sell shares to raise cash. I want to point out another company that just completely diluted the stock market by selling more and more shares to stay in business after losing millions and millions of dollars. Oh, you kind of get where I'm going with this. Yeah, MoviePass. It's kind of interesting that so many of the things that Uber is doing, I saw in MoviePass, and MoviePass got creamed in a year. By the way, here's a chart for the S&P 500 companies that burned the most free cash in the fourth quarter. It was General Motors, Boeing, Archer Daniels Midland, Uber Technologies, and NetExtra Energy. And however, General Motors and Archer Daniels Midland, their stock went down. These other companies went up. So that is a fairly, I think, complete picture of what we're looking at. The bottom line is Uber and Lyft both have at least a few years to get their act together to become profitable. And they might very well be. I mean, Uber is getting into credit lending, and basically becoming like a loan company, and they have like a payment service on the way. And Uber Eats has a chance to grow, and Uber Eats, I think, is a little bit more profitable than Uber Rides, so they might pull around. Lyft needs to definitely do something. They've by far been the least ambitious, and in fact, their whole in partnership with that company that did the autonomous vehicles, that fell through, so they might be in more trouble. But they've got more cash, or they don't have more cash. They have a little less cash, but because they aren't as big, they don't have as much cash to burn. So Lyft could definitely invest something into something that might make money. And that's another thing. This is all contingent on things running as is. This does not account for them selling businesses or market share to raise some money, selling additional stocks, maybe buying something to help them, with their overall company. There's a lot of things that could change this, but right now we're looking at, according to this article, a year and a half for Uber. It was about 3 for the other article, and Lyft 7 years, which, granted, I guess I'd like to be in a position where I'd much rather have 7 years to become profitable than 3 years, but, whatever. It is what it is. We'll just have to see where this all goes. But anyway, that is where we are going to end this video. What do you think? Do you agree with this article? Are you invested in Uber and Lyft? Are you bearish, which means you're not investing your money in it? Or are you bullish, where you're going all in? And if so, why in both of those situations? I would love to know. Comment below. Like, favorite, share, subscribe. If you enjoy this, oh yeah, I don't need to say it anymore. Because of I've been saying that closing for so long, I keep forgetting, you have this setup, this wonderful setup, so that you don't have to say that every single time. But anyway, we're going to end it right there. And as always, flame responsibly. Have a good one.